Assalamualaikum and hi everyone. I am Madam Yusna Liza. If you are new here, welcome to my channel. If you are returning, welcome back. In today's video, we are going to learn on how to answer the question regarding MFRS 137 provision, contingent liabilities, and contingent assets. And this is FAR270 final exam question, July 2023. If you're learning also IAS 37, this is also equivalent to IAS 37, and this question and answer session will also help you to understand the MFRS better. So let's start. We start off with the first part of the question. So let's just look at the first question. According to MFRS 137, a provision, contingent liabilities, and contingent asset, an obligating event is an event that creates legal and constructive obligation that result in an entity having no realistic alternative to settle the obligation. So there are two issues here. It's about legal and constructive obligation. So let's look at the requirement. You are asked to identify each of the following situation. Either there is a legal or a constructive obligation. So there will be four situations. And before we go on looking at the situation, why not we just recall what is a legal obligation and what is a constructive obligation before we can identify whether the situation falls under legal or constructive obligation. A legal obligation is an obligation that derives from a contract, which is through either it is explicit or implicit terms, through legislation or other operation of law. What is actually constructive obligation? If you can recall, it is a constructive obligation is an obligation which derives from entities' action by an established pattern of past practice. Can be published policies or whatever specific current statement which indicate that the entities will accept certain responsibilities. It will accept certain responsibilities to the other entities, to a third party in particular, to the public perhaps, and so, as a result it has created a valid expectation on the part of those other parties. So meaning that if they are the public, so the parties will have that expectation, a valid expectation that entity will discharge their responsibility. So that was about to recall it, right? So let's look at the situation now. Situation 1, Ecopetrol, an entity in the oil industry, causes contamination. So we're going to look at whether it is a legal or constructive obligation. So we just change the color. Right. So an entity in the oil industry causes contamination and operates in Trono. It's a country where there is no environmental legislation. So meaning that there are no legal obligation there for you to go and let's say clean the contaminated sea, perhaps, or contaminated land. All right. Here, the company has a widely published environmental policy. However, company has a widely published environmental policy in which it undertakes to clean up all the contamination it causes. Even though there is no environmental obligation, legislation, you as the company, Ecopetrol, has a published environmental policy that was also having a record that they have honored this published policy. So this one is not going to be legal obligation, but that would be an issue of constructive obligation. So let's go to the second question. Use-wise, Berhad Hypermarket in Heliconia Avenue has a company policy of refunding purchases by dissatisfied customer, although that was not indicated in the terms and condition of the contract, and the company's policy is well known over the top social media platform. So basically, it has been made public. It has been made widely published that the company has such policy. So therefore, that is again constructive obligation. Next, we go to the third part, which is the Roka Gali Berhad, a company located in Pulau Impian, is an entity that operates an offshore oil field. Its licensing agreement requires it to remove the oil rig at the end of the production, and the company needs to restore the seabed. At the end of the reporting period, the rig has been constructed. However, there is no oil that has been extracted. So the licensing agreement that you have here is showing that there is a legal obligation because there is to a contract that is a form of contract. So therefore, there is a legal obligation. There's a last part, which is part 4. After a concert by M-Pop in 2022, 100 fans died, possibly as a result of food poisoning from candies sold by the company, by the M-Pop group. Legal proceedings have started and the hearings have begun. So the fans have started legal proceeding and they are seeking damages from M-Pop. However, M-Pop disputes liability. So even though M-Pop disputes liability, there is already a legal proceeding that have started, and that gives M-Pop a legal obligation. So let's look at the next part, which is part B. You have the following independent situation that are extracted from several companies. This is about 2 different companies. One is Silk Law. Another one is Zephyrphone. That is with the issues related to Mfrs 137, and all companies close their account on 31st of December 2022. So you're going to look at what are the requirement of this question. Before we read the situation, let's look at the requirement. You are asked to advise the proper accounting treatment in accordance with MFRS 137, contingent liabilities, and contingent asset provisions, of course. So that was for 8 marks. And you are also asked to construct an extract of statement of profit or loss and statement of financial position. Before we go on reading the situation, why not we just recall what is prescribed by MFRS 137 on whether or not a provision shall be recognized, because you need to give advice on the accounting treatment in accordance with MFRS 137, which normally will need you to go and recommend whether the company should treat it as a provision if it fulfill the recognition criteria. If it does not fulfill the recognition criteria of a provision, it should be treated as a contingent liabilities. Or if that was the case of contingent asset, we also will be looking into that situation. So it's part B of the question is asking you to construct an extract of statement of profit or loss, if any, if it's relevant for the 2 situation above. Maybe one of them, maybe 2 of them, or maybe none of them. But the point is there might be one of them that will be required for you to construct the financial statement. So let's recall what is actually the recognition criteria for a provision under MFRS 137. So number 1 is that the entity has a present obligation. Present obligation, as it can either be legal obligation, I write here LO, or maybe constructive obligation as a result of past event. So I write PE there so that you can use that acronym for you to go and analyze what are the situation and recommend or advise the accounting treatment. Number 2, it is probable that an outflow of resources embodying economic benefits will be required to settle the obligation. So I write here OP because the outflow is probable for you to go and settle the obligation if there is any obligation that you need to fulfill. Next is there is a reliable estimate on that amount of obligation. That reliable estimate can be made. So I will write here RE for reliable estimate. So let's look at our situation whether all 3 criteria, if it's being fulfilled, then you will have to recognize a provision. If the criteria, one of them is not being fulfilled, basically you need to fulfill all 3. If not all 3, that might be an issue of the contingent liabilities. Let's look at the first situation. Silk Berhad is a well-known manufacturer of hair products in Ipoh, Perak. Recently, the company has received several legal suits. So they have received several legal suits from customer about the safety of one of its popular hair dyes. So they are selling hair dyes, and now the customers have filed a lawsuit After conducting investigation, the company has discovered the hair dye contains a harmful chemical that may cause severe skin irritation and other have problem. Okay, that is what happened. They cause severe irritation and other have problem, right? The so-called hair dye, that was the product of the company. The company has sought a legal advice, and the legal advisor believes that the company will most likely be held liable. Thus, Siglock estimates that it will incur cost of 200,000 to recall the product and compensate the affected customer. So before we look at the accounting treatment, number one, you need to go and check whether there is a present obligation as a result of past events. So in our case here, you can see that the company has been filed with a lawsuit from the customer. So therefore, there is a legal obligation, present obligation, legal obligation. And the past event is that the hair dye that was being used by the customer caused them severe skin irritation and other health problem. And if you look at the second criteria, whether or not the outflow is probable for the company to settle the obligation. So you have this information that legal advisor believes that the company will most likely be held liable. So be held liable means the outflow is probable. So the outflow is probable. And therefore, there is also an estimate that was given by Siglock that if they were to recall all the product, they need to compensate the customer, and the amount is 200,000. So there is a reliable estimate. So you can see here all three criteria, which is there is a present obligation as a result of past event, either legal or constructive obligation. Second one is that there is also an outflow that is probable. Third one is that there is a reliable estimate of the amount of obligation. So let's look at how do we write the answer. So you have to go and mention that there is a present obligation. What was a present obligation? Legal obligation. Here it was a legal suit from customer resulting from the so-called past event where the company sell a harmful dye, hair dye that cause severe skin irritation and other health problem. That was the first criteria. The second criteria, you have to mention that the outflow of resources to settle the obligation is probable. Why? The legal advisor give the reason why. Don't just mention the outflow is probable, give the reason. The reason is because the legal advisor, it has to be the legal advisor or maybe the company's lawyer, and the one with the authorities that the company will most likely be held liable. So if the company will be held liable, meaning that the outflow is probable, the company will have to compensate the customer. Next is that the cost can also be reliably measured as the company already has an estimated cost of 200,000. And therefore, in terms of accounting treatment, Siglock, which is a company, should recognize a provision for compensation because you are going to compensate the affected customer based on this information. So how much is that? It was 200,000 as a liability in the statement of financial position for the year 2022. And that should also be shown as an expense. In terms of journal entry, this is where you are going to debit compensation expense and you are going to credit provision for compensation. How much? 200,000. 200,000, but this is not required, but that can help you to understand better. So that was the first one, advising the accounting treatment. Let's look at the second one. It's about Zephyr, a leading mobile phone manufacturer in Georgetown. It is facing a lawsuit. So it faced a lawsuit filed by a group of customers that um, that allege one of its smartphone model has caused harm to their health due to excessive radiation. So the lawsuit filed by the customer clearly shows that there is a legal obligation by the company because the present obligation as a result of past event is that the smartphone that were being sold to the customer has somehow caused some excessive radiation. So the company's director, however, denied the allegation, and the highly experienced legal advisor is very confident that the company will not be held liable. So there is a present obligation check. However, the legal advisor, which is a highly experienced lawyer, perhaps the advisor is confident that the company will not be held liable. So meaning that the outflow is not probable. So I put across that. However, the lawsuit has been charged against the company. They sought damage of 500,000. So there was already an estimate being made, and there is a reliable estimate. And a court hearing is scheduled for next year, meaning that the hearing is just somewhere into 2023. So the damage claim was for 500,000. So it was a reliable estimate. And therefore, let's look at the advice. So there is a present obligation. What is the present obligation? Legal obligation. What is the proof? The lawsuit filed against the company. What was the past event? The excessive radiation caused by the use of the smartphone that was purchased from the company, right? And the second criteria here, I was looking at the estimate, because the estimate here is the one that was fulfilled, the first criteria, and the third criteria. So I put the third criteria here. Estimate of the amount can be measured reliably, where the damage was 500,000. However, the outflow of resources required to settle the obligation is not probable. Why? The legal advisor, the highly experienced legal advisor, is in the opinion, and he's very confident that the company will not be held liable. And because of that, 2 out of 3 criteria is only fulfilled, these two, but the third criteria is not fulfilled. So therefore, this does not meet the criteria of a provision. And if it's not a provision, it must be disclosed as a contingent liability. So let's look. The recommendation of accounting treatment. Zephyr Phone should provide the event just in the disclosure note to its financial statement for the year 2022 as a contingent liability. Nonetheless, the company should not recognize a provision for lawsuit. Why? Because there was not, the issue is that does not meet the 3 recognition criteria. So there is no journal entry needed, just a disclosure note, no extract of financial statement for you to go and present for this particular company. You are asked to construct an extract statement of profit or loss for the second part. Here it is clear that Zephyr Phone does not need that because it was a contingent liability. But for Silk Log, you can see that I've already put there the compensation cost under the expenses. Remember, I earlier debited the compensation cost, and the provision for compensation, I put them under the current liabilities, which is actually going to be the liabilities of the company for 2022. With that, I thank you for watching. I'll see you when I will see you, and have a pleasant day ahead, and thank you so much.